Good morning, everyone. Welcome to the Locke in Your Success Trade and Market Update for April 14th, 2014. Before we get going, we would like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we are not making any specific trade recommendations. Also, the risk of loss in trading options may be substantial, so please be aware of all your risks prior to placing any trades. And also note that we do use computer-simulated hypothetical trades, which are believed to be as accurately represented as possible. However, they may vary from live trade positions. Also, if you're watching this on YouTube or SMB, come on over, check out our programs, the M3 Bearish Butterfly ROCK and group coaching, as well as the trading triangle programs at lockeinyoursuccess.com. Join our mailing list, get the free report, 7 Secrets to Becoming a Successful Trader, and you can sign up to be notified of this free weekly webinar. M21 program is going to be available early release or pre-launch probably within the next 7 days. So just keep that in mind. The actual launch, it may be another few weeks, but I got them to put this together and early release it to people who know they want it. So if you know you want it, the best thing to do is just come on in, and why don't you just send me an email at john@lockeinyoursuccess.com, and I'll get those details forwarded out to SMB, and we'll see if we can get the earliest possible copy for you guys. All right, let's take a look at what's going on in the markets. And we'll start with the Russell. Last week, on Monday morning, we were sitting here at a support level. I was thinking that the most likely move from this point would be a bounce and have the market close in this area. I was still of that opinion as of Monday morning. By Monday afternoon, that opinion changed. And if you remember, when we were talking about this, we were looking at the SPX. Actually, let me get to the SPX. We were looking at the SPX, and that was way up here. And one of my big concerns is when you have a breakout through the top, it's and it breaks back into the range like it did here on Friday. It's very, very likely that we're going to come down and test support. And I was thinking that if that happened, it would drag the Russell down and cause that to break its support level here and come on down a little bit further, and that's pretty much what happened. In addition, that day, if you look at the NASDAQ, and we probably should have saw this a little closer last Monday, but sometimes you miss things. As of last Monday morning, the NASDAQ had a clear break of its channel here. And, of course, the move on Monday, by the time it was over, didn't help any. And this is an indication that things are probably going to break down in the coming weeks, even though we get a bounce, because normal market movement would be break this channel, retest the backside of the channel, and then continue down to the next support level, which is pretty much what we had here. So, everything is kind of in line. The Russell just kind of followed suit. Once we broke down on Monday, we could come on in here and we see a topping pattern trend line, and I would expect that the bounce would come in here, tag the backside of this trend line, and then continue to move down. So things are working pretty much as technically correct. There's not really a big deal here. So the market is kind of making sense here. So if we look at the SPX, it did break down more or less on Thursday, and it just continued down to its next support level. So, where do we go from here? And this is what I'm thinking. This makes sense for the market to bounce here. We came down to the next support level on SPX. It makes sense for the market to bounce to the back side of this trend line here, which is going to be like a 17, 18-point bounce. More than likely continue down. And I say that because this bounce in the NASDAQ, if we have it, NASDAQ comes down here. If we have a bounce, it should be limited to the 3560 area. and a bounce on the Russell should be limited to this breakdown area here, 1150 at the maximum, although I'm thinking it's probably more going to be limited to the 1135, 1136 area. So what I would expect is probably some sort of a positive reaction off of our 200-day moving average, off of this. If you're looking, let's look at the SPX first. Off that 200-day moving average on the Russell, off of this support level on the SPX, and off of this support level on the NASDAQ. And if you look at the Dow, this here is coming into its weekly trend line, which again I would expect a bounce off of its weekly trend line, at least back up to the 16,250. This is the index that may throw kind of a monkey wrench into things. If this takes off to new highs, that's probably going to be our first indication that the market's going higher. Unless that happens, I'd expect this actually to break its weekly trend line, come back down to the support level at 15,750, and then probably trade under that. So the targets I have, I mean, this is a plausible target for the Dow for the week. For the SPX, this is a reasonable target for the SPX for the week, to tag or maybe slightly below that. As far as the Russell goes, this is just not going to happen. It was weaker than expected with the breakdown, as the NASDAQ was. So we're probably more likely in the 1125 range for a close of the week. So that's what my thinking is on the markets. Longer term, I think this breakdown is kind of serious. I mean, I don't think we're going to crash or anything, but I do think we're going to be more like we've been saying for a while, actually since we've tagged 1140 area, that we'd be going more into a sideways trend, and we kind of are. We hit our first lower low here in quite some time. We went a little bit higher, but now we're right back down here again. So we're continuing. I would expect this very wide volatile sideways range to continue for a while. And just as a note, we had, if you're just trading the Russell, we had a pretty good pullback here, very strong, very fast on the Russell and on the NASDAQ. If you're trading the NASDAQ, the S&P and the Dow, I mean, they're barely pulling back at all. So, the Dow this is just a very normal small pullback, nothing that big, and the SPX, we broke a support level here, but this is very minor. I mean, we just put in a minor topping pattern. This topping pattern, by the way, implies that the SPX is going to come down to 1775. So I wouldn't be surprised to see that at all after this little bounce that we're probably going to have. But so far, this really isn't a market-wide catastrophe. It's pretty much limited to the Russell and the NASDAQ. So just keep that in mind. All right, let's move on to a couple of questions here. I have a question. What will be in the SSS? SSS stands for Super Simple Spread Trade Strategies. So that's going to be things like more beginner type of stuff, such as Iron Condor. I mean, not such as Iron, but such as the V Condor, and I have a bullish vertical spread strategy. I'll probably do the cat trade, which is pretty simple, and a few other very simple strategies that work well and are good for beginners that don't want to get into the more complex stuff. Cost of the M21, I still don't know. It's going to be under $1,000. So I do know that with the introductory price, and SMB should be releasing that soon, but I'm not sure the exact cost just yet. And the M21 is not the V Condor, no. The V Condor is just a simple strategy. The M21 is going to be, I have several webinars on that, but it's going to be more around technical analysis, planning trades around market conditions, and use the usage of the Bearish Butterfly, M3, and ROCK trades combined with technical analysis so that you can maximize those trades out. So it's a very good system there, a very good way to improve your performance with those systems. All right, let's take a look at what we have for positions here. I will start with the May positions this week, And I have one more question. Okay, between the end of the bullish skew and the strength of this decline, do you think the market is in transition from bull to bear? Well, the strength of the pullback is mainly in the Russell and the NASDAQ. The Dow and the SPX have really barely pulled back. So, but yeah, with the larger daily range coming in, and let's look at this. If you go back, so this is a question basically, is the market turning around? And one of the things we can do is we can learn from history, right? If we go, let's go to the Russell. If we run back to, let's just do a daily here, 2006 area. We had a fairly smooth uptrend in here until somewhere in 2006 was the first significant down. We started getting some harsh down moves. 2007 went into this sideways trend that it was fairly volatile range. Then we stepped down, and then we went into the crash. So compared to this, I compare this to being, say, here, in this range here. And now we came down, and we're starting to see cracks in the armor, and we're starting to get our really first significant pullback in quite some time. So we're going to probably pull back here, keep a range for a little while, and then we're going to have another push up, probably to 1350 would be my guess. And from there, we'll probably put in this major topping pattern over the next year. Then we'll go slightly lower, and then we'll have some sort of a market crash. So, I really take history as being, history tends to repeat itself in the markets. And this is how I compare to that. Like I said, leading out of 2000, leading up to 2006, it wasn't as strong as this move was, and it wasn't as smooth as this move was. However, it was similar to the move. And now we're starting to get the breakdowns, and like I said, we'll hang out in this range. We'll take a shot up to around 1350, something like this, which will actually complete out this pattern here, and that's when the markets will likely move down, assuming that coincides with the SPX is doing. So essentially, that's what I think. I mean, in short, the answer is yes. This is the start of it. However, we're likely to get some sort of extended sideways or slightly bearish market here for a little while, and then shoot up a little bit higher, and then have a lot of volatility up here at the 1350 level, and then drop. If this volatility picks up in all the indices by a lot, then that may indicate that we're not going to 1350. But for now, I'm still with that premise. Okay, with the markets closed this Friday, how will the Russell settle this Friday? They will settle, I believe, check on the CBOE website. Normally what they do is they will have the last trading day of the options on Wednesday and use Thursday's RLS to settle the options. Okay, so that's all the questions. We will shoot, for now, we'll shoot over to the index here. The V-Condor really hasn't had any adjustments since it started except for Friday. I was over my delta limit. I didn't want to buy back a 1060 option, but those are the guidelines, so we went ahead and bought that, mainly because I thought we were getting some sort of a bounce today, and the futures look like we are going to. However, you never know. The market could have dropped down just as easy. But anyway, we bought back, per guidelines, this 1060 put. If we look a half an hour earlier, we're only allowing plus 50 delta to the downside on this 15-lot V-Condor. In case the market really starts to go, we allow more delta to the upside than the downside. Anyway, we're over the plus 50. I bought back this one option, kicked this down to about, 41? I'm sorry, 39. And that is the new position here. So if we get a good bounce today, that will be helpful. If not, then we'll continue to make our adjustments as things go along. But everything is going okay here with this position so far. As far as the May, let's see, what else do we have for May? The May Bearish Butterfly. This position, and one of the things you'll notice, Bearish Butterfly, far from expiration, is fantastic for these kind of conditions. So here we have, if you remember, this position started up a little bit higher. Let's see what we started at. We started at 1180, and we had to roll back to 50 points to at the money when the market pulled back. And this is what the position currently looks like. Like I said, there were no adjustments last week. As long as the market remains sideways or bearish, this will be a fantastic trade this month. If we really take off hard to the upside, I mean, that's the losing scenario. And like I said, there are things you can do to protect against that if you want to hold your 10% profit here and continue on. But like I said, we trade this exactly by guidelines. And in a more normal market, this is actually a really good position to be in. So that is the Bearish Butterfly for May. Everything is going fine. What else do I have for May? I do have a May M3 on. If you'll come back to Monday, actually there was no adjustments on this May M3 until Friday. So this is what we look like on Monday. Everything was fine here. We had a bit of a bounce. We didn't hit any delta numbers or anything like that. We pulled back, obviously, by Friday. And I'll show you the position as of Friday. Oh, excuse me, I'm going to have to shut this down. I apologize. All right, let's try this again. Yeah, Vincent, death by option view. Yeah, you have it, my friend. Luckily, it restarts really quickly. All right, so as of today, what I ended up doing is I ended up rolling this position back. I believe we were at 1140. We rolled back to 1090, which was about a little bit below the money at the time. I added 5 verticals in here and went to a position that looks like this. And this doesn't look right. Why doesn't that look right? Oh, okay, that's because this is telling me it's telling me the wrong price of the index. That's why. I'm in BackTrader or something. Let me start live quotes reception. That makes more sense. Okay, so yeah, we came back. We rolled this position back to about 25 or so points below the money. We came to 1090, put verticals in, and ended up with basically flat delta here. And this is what our position looks like. The price is way back here at 1110, and we have plenty of downside room. We have plenty of upside room. It's a nice flat position and looks really nice. Currently up about $2,000. So the May position takes that with stride. The April positions, on the other hand, are a little more difficult to manage when we start getting large price moves because we're only, well, as of now, 4 days to expiration. Last week we were like 7 or 8. So pulling in, what we moved down, at least we had a good bounce last week, 40 points plus, and then we had a 50-point pullback. So that's a lot of movement for expiration week. So let's take a look at how the April trades made out. We'll first start with the April V Condor, which really didn't get any adjustments. It's just kind of sitting here in this position. And like I said, I am planning on letting this expire. However, I'm not going to take a huge loss in this either. If the market continues to come down hard, then we'll exit this at a small loss. More than likely, though, we are going to pause at least for a day or two, and being 4 days to expiration, and actually since we're actually settling on Thursday morning, we're even closer to expiration than that. These are going to decay very, very quickly, and we should be fine. There really shouldn't be an issue here. So more than likely, we're just going to expire this. Right. They're settling. They're cease trading on Wednesday and settlements on Thursday. Right. So we have a day less than what we think we do, and that's that. As far as the April M3, that trade was actually closed on Thursday when the market was down 28 points, and we'll kind of talk about that. So let's go back to. I did hold the ROCK trade open though, so even though they were similar positions, I closed. If you go to Wednesday, actually let's go back to Monday morning, because I did make an intraday adjustment here, and primarily because we are actually, we were close enough to expiration where price movement is an issue. So if we were looking at this on Monday morning at 10 o'clock, this is what the position looked like, and it would be fairly vulnerable to a down move. So what we ended up doing here is essentially adjusting this, rolling everything back and repositioning. So let me look at my notes here. I adjusted down to, I took these short strikes at 11:30 down to 11:10, and I also moved the long strikes and just repositioned my shorts. So if you come in, I think I did that earlier. So come into 11:30. All right, well, this is just taking some time for us. Let's just go through Tuesday. You see that the shorts that were 11:30, they're back down at 11:10, and I also rolled down my longs to 1060, and I put my shorts up here at 11:30 and 11:40, and I have my longs at 1060. I just kind of kept that long position right here. So that ended up in a position like this. Let's see, I have a question. In my M3, am I going to move my 11 to a higher delta? I certainly could have, but with the market wiggling around 10 days to expiration, I was just kind of, actually, I don't have to, right, because I am actually 95 delta as it is. So no, I wouldn't move it to a higher than 95 delta, no. And that was even way up at 920 here. All right, so here is our position as of Tuesday. Let's see, on Tuesday by the afternoon, because the market was up again, I did start having a delta issue, I believe. I ended up rolling these 1130s up to 1140 to correct that, and this is what the position looked like as of Tuesday afternoon. I didn't have to do any adjustments on Wednesday because it was only a 3-point up move. There wasn't any Greeks problems. And then on Thursday, I ended up closing this trade out at about 2:30 because the market was coming down hard. If you remember, we got whipsawed to the downside. This is my 3 strikes you're out rule. We went to the upside, got whipsawed to the downside, and we got whipsawed to the upside. Now we're getting whipsawed to the downside again. The market is just getting too wiggly to be in this close to expiration, too back and forth. So I was pulled out at about 2:30 here, and if you look at the reports, we pulled this out for about a $2,200 gain. And like I said, the market was down 28 points by the time we pulled out of this, so it did shave off some of the gains, but it was fine. I just closed that out there on Wednesday. I decided to the ROCK trade really wasn't up any money, and for demonstration purposes, more or less, we decided just to hold that open. So I'll show you where I sit with the ROCK position. No, I don't want to close back trader. Let's go to the ROCK position, and that is the last trade to go over as well. Then we'll take some more questions. I'll go, let's see, April ROCK position. Let's go back to Monday morning. And this was pretty much a similar situation as the M3 trade was. If we come to 10 o'clock and we switch accounts, to our April ROCK trade. Remember, this was in an M3-ish type of a position. And it was very similar to that. What we did here is we were definitely too high delta at this point. So that day we did the same thing. We rolled everything back to the 1110 range. So if you look on the 7th, there's a whole bunch of trades here, and that was just the repositioning. I'll just show you where it went to. About the same time, we rolled this back so that our shorts were at 1110, and we were in the 1130, 1140 short puts here with 5 and 5. The difference with this position is our call wasn't as deep in the money. This is only a 69 delta call. But so our negative delta was a little higher, but not enough to be a concern, so we left it here. And this is what the position looks like here. We did have a bit of a problem here with gamma trend, but I was okay with that. On Tuesday, when the market continued up, I ended up adding, instead of doing a vertical like we did on the M3 trade, I just handled this a little bit differently. I corrected my delta by buying another 1120 call. So now I have 278 delta calls, and I'm still in my 1130, 1140s. The position looks like this, and that pretty much straightened everything out to the upside, and the Greeks are doing fine. So this is what the position looked like as of Thursday. There was no problem on Wednesday, although I did have a very, very low Vega number. And then on Thursday, when the market came down hard, all I did is I dropped. I'm going into kind of an expiration type of a thing here, and I just want to be kind of under the tent. So what I ended up doing is I dropped my 2 calls. I simply sold 2 calls to straighten my delta base pretty much to flat on Thursday, which put me in this position here. And then with the continued move on Friday, I was too positive delta, so I ended up selling 5 of my 1100 puts and rolling them back to 1190. And now I'm just trying to widen out for expiration here and hoping to outrun the market. I like the position. I mean, this is kind of like my weekly stance. So I like this position because I still have a lot of profit left, and if the market is somewhat calm for a day or two, I might be able to take a reasonable profit here and move on. So that is all the positions that I have. Like I said, we closed the M3 at a small profit. The other 2 April positions are going to expire this week, so one way or the other we'll be out of them. I'm likely going to trade out of this one and expire the V Condor. And of course, if the market gives us too much trouble, we'll just take a small loss. But I think this has a good potential of still making something. All right, so I have questions, and I can take more questions too. If anybody has them, they can type them in. So why did I not convert to a normal rock earlier on when the Greeks would permit me to do that? Well, if I enter this trade as an M3, in a rock guidelines, if we enter the trade as an M3, we do not have any kind of rule that makes us convert to a normal rock entry unless the market outruns the M3. In other words, if I started with an M3 and the market ran more than 10 points past my long strike, and I was to make an adjustment at that point, I could do an entry check and convert myself into a normal rock position. Normally, if that never happens, I'm not going to go into a rock position, and I'm also, and that's by guidelines. And also, if for some reason the market is really volatile and I'm close to expiration, I still may not want to go in. But I never really had the chance to go in and convert to a normal rock entry, a normal rock position, because the market never really outran the M3 position. So that's why we didn't do that. And hopefully that answers the question. And I believe that's all we have. The market's now open, so I hope everybody has an awesome week. Have a great Easter this weekend, and we'll be talking to you on Monday. Thank you, everybody.